The lights of the congressional hearing room gleamed across the polished wood tables, casting a clear glow on Jerome Powell's composed face as he straightened his tie. For nearly 2 hours, the Federal Reserve Chairman had fielded easy questions, maintaining his steady confidence. Then came Congresswoman Jasmine Crockett's turn. The freshman representative from Texas leaned toward her microphone, her sharp gaze fixed on Powell. "Mr. Powell, I've been sitting here listening to my colleagues avoid the obvious," she began, her voice calm yet firm. "Today, I'll ask one straightforward question about the $6 trillion decision your Federal Reserve made, a question no one else has dared to raise." Powell's expression shifted slightly, a flicker of unease passing across his face. The room grew still. Staffers paused mid-note, reporters leaned in. Crockett had arrived with a stack of documents no other committee member seemed to have. She'd spent weeks combing through lengthy Federal Reserve reports and overlooked economic data to prepare for this moment. "Mr. Powell," she continued, holding up a page marked with highlighted passages. "This evidence shows the Federal Reserve's policy wasn't just flawed, it was disastrously wrong. And today, I believe it's time the American people hear you admit it." Powell adjusted his microphone, tension visible in his posture. He hadn't anticipated such direct scrutiny, especially not from a freshman lawmaker. But Jasmine Crockett was no ordinary representative. A former civil rights attorney, she had built her career on confronting powerful systems and winning. The atmosphere in the hearing room thickened with anticipation. This wasn't another routine session. It was shaping into a defining exchange that could shake confidence in America's financial leadership. Before we continue this pivotal moment, make sure to like this video and subscribe to the channel so you don't miss our latest political insights and analysis. Now, let's see how Congresswoman Jasmine Crockett challenged one of the most influential figures in the global economy. Jerome Powell sat at the witness table, calm, deliberate, the embodiment of the financial establishment. At 71, the former investment banker and current Federal Reserve Chair carried an air of authority. His charcoal suit and subdued tie reflected the seriousness of his role, managing the nation's monetary stability. For years, Powell had handled hearings with practiced composure, offering technical answers and broad assurances that left lawmakers largely satisfied. "The Federal Reserve remains committed to price stability and maximum employment," Powell had stated earlier, his tone measured and formal. "Our actions have guided the U.S. economy through unprecedented challenges." Reporters in the gallery nodded as they typed, noting another predictable exchange. Wall Street executives watching remotely seemed assured that policy continuity remained intact. Throughout his 6 years as chair, Powell had earned respect across party lines, fending off criticism with complex explanations and appeals to the Fed's independence. Across from him sat Congresswoman Jasmine Crockett, 43, representing Texas's 30th congressional district. Despite being new to Capitol Hill, she had already gained a reputation for her rigorous preparation and unwillingness to accept vague or evasive answers. Before entering politics, Jasmine Crockett had already earned a reputation as a fearless civil rights attorney who stood firm against powerful institutions. "I'm not here for political theater," Crockett had told her staff the night before, while reviewing economic data past 2 a.m. "I'm here because everyday Americans are struggling while economists debate theory. Someone has to hold the Federal Reserve accountable." The stakes were enormous. Inflation had severely impacted American households. Grocery prices up by 25%, housing costs rising fast, and wages failing to keep up. While financial elites safeguarded their wealth, working families were falling behind. Recent economic studies indicated that the Federal Reserve's massive $6 trillion zero-cents intervention had not only failed to achieve its intended goals, but had deepened income inequality. In her congressional office, Crockett had pinned letters from her constituents to the wall: a retired teacher who couldn't afford medication, a young couple unable to buy a home, and small business owners burdened by rising expenses. "These are the people who deserve real answers," she reminded her team. As Jerome Powell concluded another cautious and indirect response to a committee member, Crockett quietly organized her notes. Unlike many lawmakers who arrived with staff-prepared talking points, She had spent weeks personally analyzing Federal Reserve data, consulting with independent economists, and pinpointing inconsistencies in Powell's previous testimonies. "The gentlewoman from Texas is recognized for 5 minutes," the committee chair announced. Powell took a sip of water, unaware that Crockett had uncovered what most financial journalists had missed: internal Federal Reserve reports predicting the harmful effects of their own policies, which were later disregarded. "Thank you, Mr. Chairman," Crockett began, her voice steady and clear across the chamber. "Mr. Powell, I'd like to address a specific issue today: the Federal Reserve's $6 trillion intervention in the markets between 2020 and 2022. Powell nodded slightly, expecting another routine question about inflation targets or interest rates. "Would you agree?" Crockett asked. "That the primary mandate of the Federal Reserve is to ensure price stability and maximum employment?" "Yes, Congresswoman," Powell replied, settling into familiar ground. Crockett tapped her tablet, and a graph immediately appeared on the large display screens throughout the chamber. "This chart," Crockett said, pointing to the display, "shows the Federal Reserve's balance sheet expanding to nearly $9 trillion, an unprecedented level." "Correct," Powell replied evenly. "These were extraordinary times that required decisive action. Our models indicated—" "About those models," Crockett interjected, sliding a folder to an aide who handed it to Powell. "This is an internal Federal Reserve memo dated March 2021. It's marked confidential, but my office obtained it through a Freedom of Information Act request filed 6 months ago." A low murmur swept through the room. Powell looked down at the document, his expression tightening. "This memo, written by your own economic team," Crockett continued, "warned that continuing asset purchases at that scale would likely cause persistent inflation above your 2% target. Yet the purchases continued for another year. Can you explain why?" Powell leaned forward slightly, choosing his words carefully. "Congresswoman, policy decisions always involve balancing multiple risks. At the time, we believed that acting too little carried greater dangers than acting too much." "So, you were aware of the inflation risk?" Crockett pressed. "We acknowledged uncertainties, yes," Powell admitted. "But Mr. Powell," Crockett said firmly, signaling her aide again. Another document appeared on the screens. "This is the transcript of your closed-door meeting with major bank CEOs in April 2021. In it, you said, and I quote, 'Inflation concerns are likely transitory and will normalize within quarters, not years.' Did you believe that statement when you made it?" The air in the chamber grew tense. Powell's testimony under oath now had to align with his past remarks. "At that time, yes," he replied. "Based on the data available, that was our assessment." Crockett nodded, her expression steady. "Let's move to what your own researchers were reporting. This analysis from your San Francisco Federal Reserve Branch explicitly warned that supply chain disruptions combined with excess liquidity would lead to what they called structural inflation, inflation resistant to traditional monetary policy tools. This report," Crockett continued, "was presented to the Federal Open Market Committee in February 2021, before you reassured those bank CEOs." Powell's face stayed composed, but his grip on the pen tightened slightly. "Congresswoman," he began, "economic forecasting is not an exact science. Different models produce different projections." "I understand forecasting isn't perfect," Crockett replied evenly, her tone measured but firm. "But that's not what I'm asking. I'm asking why the Federal Reserve ignored warnings from its own experts, even after new data contradicted your public statements." The committee chair glanced toward the timer. "The gentlewoman has 2 minutes remaining." Crockett nodded, lifting a thicker document from her stack. "Mr. Powell, these are the minutes from 5 consecutive Fed meetings. In each, your staff economists presented data showing that continued asset purchases were inflating asset bubbles without improving employment levels. Yet, the Fed repeatedly voted to keep the program going." She leaned forward slightly. "My question is simple. Why did the Federal Reserve disregard its own research?" Powell's jaw tightened as he responded carefully. "Congresswoman, monetary policy involves weighing multiple, complex variables. We made the best decisions possible based on the information we had at the time. The information you had, Crockett countered, included explicit warnings from your own economists. Warnings you chose to ignore. She turned another page in her binder. Let's discuss the distributional effects. Your own research department published this analysis. She held up another document. It concluded that your policies disproportionately benefited the wealthiest 10% of Americans, while offering minimal relief to working families. Was that considered an acceptable outcome for the Federal Reserve? The room fell silent. Reporters typed rapidly, and committee members from both parties leaned in. Focused. The Federal Reserve, Powell replied, his voice slightly strained, does not aim for specific distributional results. Our mandate is macroeconomic stability. Yet your own economists repeatedly warned that this level of intervention could create macroeconomic instability, Crockett stated clearly. Which brings me to my central question. She paused, looking directly at Powell. Mr. Powell, did the Federal Reserve make a $6 trillion, 0-cent decision that ultimately hurt ordinary Americans while primarily benefiting the financial sector and the wealthy? The chairman began his usual response, but Crockett continued before he could finish. Before you answer, she said, my office has compiled a detailed timeline comparing your public remarks with internal Federal Reserve documents. The record shows a consistent pattern. Your institution often said one thing publicly while internal research revealed something very different. Powell glanced toward his aides, who exchanged uneasy looks. The gentlewoman's time has expired, the committee chair announced, but the witness may respond. Powell cleared his throat, aware of the tension in the room. His reputation for steady leadership was on the line, yet denying documented evidence risked greater damage to his credibility. Congresswoman Crockett, he began, his tone noticeably less steady. Monetary policy always involves difficult trade-offs and complex decisions. That's not what I asked. Mr. Powell, Crockett interjected, maintaining her composure. Did the Federal Reserve make a $6 trillion mistake? Yes or no? The room went still. All eyes turned toward Powell, who sat motionless for a brief moment. The weight of the question lingered as he looked down at the stack of documents Crockett had presented. Internal memos, economic analyses, and meeting minutes that painted a troubling picture of ignored warnings and flawed decisions. Mr. Powell, the committee chair prompted, please respond to the Congresswoman's question. Powell adjusted his microphone, his composure beginning to falter. Monetary policy decisions are complex, he started, though the confidence in his voice had noticeably faded. In hindsight, there were some misjudgments in our approach. Crockett leaned forward slightly. Misjudgments, Mr. Powell? Your own economists repeatedly warned you about the potential fallout. These weren't simple errors, they were ignored warnings. She raised another document. This memo from your research division, dated July 2021, explicitly states, and I quote, continuing asset purchases. At current levels, risks creating inflation that will later require aggressive contractionary measures to manage. Your team predicted precisely what happened. Powell's expression tightened. He glanced toward his aides but found no support there. The evidence was already displayed for everyone to see. Congresswoman, he said after a pause. With the benefit of hindsight, yes, the scale of our intervention exceeded what was necessary to meet our objectives. A quiet murmur spread through the room. Crockett continued, so you're acknowledging that the Federal Reserve's $6 trillion intervention was excessive? Powell took a slow breath. The magnitude of our response. He paused, carefully choosing his words. Yes, it was greater than what was required. The acknowledgement drew immediate attention. Reporters typed rapidly, and several committee members leaned forward, surprised by his admission. But Crockett pressed on. And this excessive intervention, this $6 trillion mistake, who actually benefited from it, Mr. Powell? Our policies were designed to support the broader economy, Powell replied, attempting to steady himself. That's not what your own research indicates, Crockett countered, signaling to her aide to display another document. This Federal Reserve study shows that 72% of the benefits from your asset purchase program went to the top 5% of wealth holders, while the inflation it fueled disproportionately affected lower-income Americans. Is that accurate? Crockett asked. Powell swallowed hard. That particular analysis does indicate a distributional effect that was not our intention. Not your intention, Crockett pressed. But your economists predicted it, didn't they? Before you decided to extend the program for another year. Powell's expression stiffened. Congresswoman, we were operating under unprecedented conditions. Mr. Powell, Crockett interrupted, her tone steady but unyielding. The American people aren't interested in justifications. They want to understand why the very institution responsible for maintaining economic stability triggered the worst inflation in 4 decades, while the wealthiest Americans gained the most. She opened another folder. Your own San Francisco Federal Reserve released this study, showing that your policies drove home prices up by 23% more than they would have otherwise, effectively pushing millions of first-time buyers out of the market. Tell me, Mr. Powell, was making homeownership unattainable for an entire generation part of your mandate? Powell's composure finally cracked. No, Congresswoman, it was not, he admitted, his voice tight. And yes, with the benefit of hindsight, the scale of our intervention was indeed a mistake. A collective murmur filled the room. Jerome Powell, the steady, unflappable chairman of the Federal Reserve, known for his restraint, had just conceded to a $6 trillion error under Crockett's persistent questioning. To be clear, Crockett said, her voice cutting through the stunned silence, you're acknowledging that the Federal Reserve made a $6 trillion mistake that fueled inflation, deepened inequality, and mainly benefited the financial sector? Powell closed his eyes briefly. When he opened them again, the confidence was gone, replaced by quiet resignation. The data indicates that our response was larger than necessary and created unintended consequences that have been difficult for many Americans. Yes. The committee room erupted. Lawmakers from both sides began speaking over one another. Financial reporters hurried out to break the story. The chairman struggled to restore order. Amid the chaos, Crockett and Powell's eyes met across the chamber. She had done what few believed possible, compelled the Federal Reserve chairman to publicly admit a major policy failure that touched every American. Powell's long-cultivated image of steady leadership now lay in ruins. Order in the committee, the chairman shouted, finally restoring control. We'll take a 15-minute recess. As members shuffled papers and aides whispered frantically, cameras captured the contrasting scenes that would dominate headlines for days. Jerome Powell, pale and visibly shaken, gathering his notes with trembling hands, and Congresswoman Jasmine Crockett, calm and composed, neatly organizing her documents. The most powerful financial official in the nation had just conceded to a $6 trillion policy error, and a first-term Congresswoman from Texas had made it happen with one meticulously researched and precisely executed line of questioning. Within minutes of Powell's admission, global markets reacted sharply. Trading screens across Wall Street flashed red as the Dow Jones dropped 450 points in under an hour. Bitcoin jumped 8% as investors sought safer havens outside traditional finance. CNBC broke into its regular programming with a headline that read, Fed Chair Powell admits $6 trillion policy mistake. In the halls of Congress, Jasmine Crockett was immediately surrounded by a wave of reporters, their questions overlapping in a rush for comment. Congresswoman Crockett, what prompted your investigation into the Fed's internal documents? Will you be calling for Chairman Powell's resignation? How long have you been preparing this line of questioning? Crockett raised her hands calmly. Today wasn't about politics or headlines, she replied. It was about accountability. For 3 years, Americans were told inflation was an unavoidable global issue. What we've uncovered today shows the Federal Reserve had clear warnings about the results of its actions and chose to ignore them. Across Washington, the fallout was immediate. Phones rang nonstop. The Treasury Secretary called an emergency meeting. The President's economic team gathered in the West Wing, drafting a response. On Capitol Hill, both parties scrambled to shape their narratives following Powell's shocking admission. When the recess ended, Powell returned to the hearing room looking visibly shaken. His aides had spent the break in crisis mode, but the damage was already done. As questioning resumed, members from both parties pressed harder, armed with Crockett's newly revealed documents. A senior Republican began. Mr. Powell, If your own economists warned about the inflationary risks of these policies, why did you continue to tell Congress that inflation was transitory? A Democratic member followed. Given what we now know, how can Americans trust the Federal Reserve to manage the economy when you ignored your own experts? Powell stumbled through the remaining hours of testimony as financial news networks split their screens between the hearing and market turmoil. Former Fed officials appeared on live broadcasts, many expressing disbelief. "In my 30 years following the Federal Reserve," said a former governor on Bloomberg TV, "I've never seen a Fed chair admit to a mistake of this scale. The implications are enormous." By evening, our Powell trillion-dollar mistake and Crockett exposes Fed were trending nationwide. Millions had viewed clips of the exchange across social media. Financial analysts issued emergency guidance, while everyday Americans shared how inflation had eroded their savings and purchasing power. The next morning's headlines told the story. The Wall Street Journal, Powell admits Fed's $6 trillion mistake under congressional questioning. The New York Times, Fed chair concedes major policy error. Markets tumble. The Washington Post, how Rep. Crockett cornered the most powerful financial figure in America. On CNBC's Squawk Box, experts debated the fallout. "The Fed's credibility has been severely damaged," one economist explained. Powell essentially admitted they ignored internal research to continue policies that enriched financial markets while creating the worst inflation in decades. Back in Dallas, Crockett held a virtual town hall that drew record attendance. "What happened yesterday wasn't just about monetary policy," she told her constituents. "It was about who our economy truly serves. For too long, working Americans have been told to trust institutions that haven't earned that trust." Meanwhile, the Federal Reserve hastily scheduled a press conference where Powell tried to contain the crisis. "My comments yesterday have been mischaracterized," he said, but reporters pushed back. "Chairman Powell," asked a Reuters correspondent, "you admitted the Fed made a $6 trillion mistake. Are you retracting that?" Another asked, "Did you read the economist's warnings presented by Congresswoman Crockett?" Each attempt at clarification only worsened the backlash. By day's end, several lawmakers from both parties had called for Powell's resignation. Inside the White House, advisors debated next steps. "Powell's term expires in 8 months," said the chief of staff. "The question is, can he last that long?" Treasury yields spiked as investors adjusted risk expectations. Global central banks issued statements reaffirming their commitment to price stability, seeking to distance themselves from the Fed's blunder. On Wall Street, a hedge fund manager who had long criticized the Fed appeared on financial TV. "This confirms what we've said for years," he declared. The Fed inflated the biggest asset bubble in history, funneled trillions to the wealthy, and left working Americans with the bill through inflation. The only surprise is that Powell finally admitted it. Former Treasury Secretary Larry Summers issued a statement. "The Federal Reserve's credibility is its greatest asset. Yesterday's events raised serious questions about the institution's transparency and decision-making." A week later, the Senate Banking Committee announced new hearings on Federal Reserve oversight. The House Financial Services Committee formed a special investigative subcommittee, naming Crockett as vice chair. Financial journalists, now criticized for years of uncritical coverage, began deeper investigations into the Fed's internal communications and policy decisions. In universities, economics professors updated their syllabi to include what was already being called the Crockett hearing, a landmark case in monetary policy accountability. 2 weeks later, Jerome Powell resigned, effective immediately. In his resignation letter, he admitted communication failures, but avoided restating the size of the Fed's mistake. The president nominated a respected economist, known for her focus on employment and financial regulation. During her confirmation hearing, she emphasized transparency and the importance of considering inequality when shaping monetary policy. At the International Monetary Fund's annual meeting, other central banks faced similar scrutiny. The Bank of England's governor was questioned in Parliament about possible parallel errors. The European Central Bank announced a review of its own asset purchase programs. 3 months later, Congresswoman Crockett sat in her office reviewing the Federal Reserve Accountability Act, which she co-sponsored. The legislation required the Fed to publish distributional impact reports, establish a diverse advisory board including labor and consumer representatives, and strengthen ethics rules for its officials. "This isn't about one hearing or one admission," she told her team. "It's about fundamentally changing how our financial system operates and who it serves." Behind her desk hung a framed front page from her local Dallas paper. The headline read, "Texas Representative Changes Federal Reserve Forever." A new economic consensus was forming, one that recognized monetary policy as not just technical, but deeply social, capable of either reducing or worsening inequality. And it had taken one congresswoman's persistence and one well-researched question to start that shift. As markets slowly stabilized and the new Fed leadership introduced reforms, Americans began noticing real changes. Financial networks featured more diverse economic perspectives. Congressional oversight became sharper and bipartisan. 6 months later, inflation had eased without triggering mass unemployment. Analysts credited the new leadership's balanced strategy and transparent communication. At a community college in her district, Crockett reflected, "One question changed how we talk about the economy," she told students and workers. But the real power came from everyday Americans who refused to accept that financial hardship was inevitable. As she concluded her remarks, she smiled. "The story of our economy isn't written by central banks or institutions. It's written by people demanding a system that works for everyone." The crowd rose in applause. The freshman congresswoman from Texas had not only exposed a $6 trillion mistake, she had helped redirect the American economy toward a fairer, more accountable future.